So we'll be talking about the 5 O's. What we need to avoid as a trader. So the number one thing here we'll be talking about this evening, it is over trading. The second thing is overconfidence. The third thing is over leverage. The fourth one is overexposure. And the fifth one is overriding stop loss. So we'll be taking it one after the other. So number one is over trading. What do we mean by over trading? So over trading is when someone is trading and your trade is in profit. Maybe it is a good day. Your trade is in profit and you just feel like, wow, today is good for me. Let me keep on trading. So by doing that, you have overtraded. Or let's assume someone is trading and your trade is a lose for that day. But you keep on having it in mind that, okay, so far I keep on trading, I will definitely come back to profits. And that is the one of the reasons many people lose money in markets, because as a trader, you must definitely have a losing day. But when you are losing at market at that particular moment, you feel like, oh, I need to trade more. I need to trade more. Maybe if I trade more, I will come back to profits. Or I will take my accounts back to break even. So as a trader, you need to avoid this. You need to avoid this. That is why every trader must have a plan, a trading plan. You will have a plan that, okay, oh, today I'll be taking at least five trade every day. I'll be taking at least 10 trade as a scalper every day. So you must have a certain number of trade you must be taking for each particular day. So as a trader, you need to avoid over trading. So the second one, okay, let me show you. Okay, I don't need to show you what over trading in our MT4. So just avoid over trading too much. Just avoid over trading. So the second one, we'll be talking about overconfidence. Overconfidence. So what do you mean by overconfidence? Is that, wow, I'm too sure of my strategy. Maybe you are using a particular strategy and the strategy is definitely working good and fine. But you believe that, wow, if I definitely use that particular strategy, I will not lose any trade. Like someone too sure about a certain strategy, and if someone is too sure about a certain strategy, that person will not, the amounts, we never take note of the amount he wants to lose in markets, because he will be too sure that I will never lose this particular trade. In trading, anything can happen. Anything can happen to markets at any moment. Even as a pro trader, someone as a pro trader, you will definitely have a losing day. So you don't have to be too sure that this is my strategy, I will never lose with this strategy. So when someone is too confident with a particular strategy that, okay, when this happens, it will definitely go this way. Nobody, we can only do our analysis and predict where the market will head, but we can never have control over markets. Market can do anything. So that is the reason you don't have to be overconfident about your strategy. So number 3 is over leverage. Over leverage. The more leverage you have on your accounts, the more risk your account is. The higher the leverage, the higher to lose that particular account. I think we have discussed what leverage is some times ago. Like something like this. You see some people that use leverage 1 to 100. We have leverage 1 to 10, leverage 1 to 1 to 50, leverage 1 to 100, 1 to 200, 1 to 500. Some brokers even allowed leverage 1 to 1,000. Leverage only give you ability to trade more than your account balance. More than your account balance. You definitely be trading with amounts that you do not own. The broker will borrow you money to enter that particular trade. That is what leverage is. So when someone is trading with high level of leverage, let's assume someone is using 1 to 1,000 leverage, or someone is using 1 to 500 leverage with low capital, you have over leveraging at that moment, because your accounts you can trade to a particular point, and you definitely receive, when you are in lose, you definitely receive a margin call that your account is at risk. So someone that is allowed to use high leverage, you look at your capital first. Oh, I'm trading with this particular capital with $100. Then you have to use a low leverage to protect that particular account. So another one is overexposure. Overexposure is when you are too exposing your accounts. Maybe someone, okay, let me show you my empty form so you can see what I'm talking about. Let me open. So I believe you can see my empty form. So let me open a new pair. For instance, we are using USD JPY. So we are on overexposure. Now, I want to enter a trade. Let me just enter a trade randomly. Sorry, let me use another MT4. Good. So you can see my screen now. I'm using USD JPY, Euro USD. So I want to enter a trade randomly now. Let me just use. Now I've taken a trade. Now let's assume this is my point of. This is where I place my stop loss, and I place my take profit at this point. Now, what do you mean by overexposure? Like, if you can see now, my account is in minus 12 right now. Is a minus 12. Now, let's assume the market have moved to some certain point, and I think like, wow, this market, I'm actually making profit at this moment. Let me enter another market, another trade with the same peers. So like this, I'm in minus 13. I now believe market is going against me because I go for buy. I believe market is going against me, and I decide to enter another trade on the same currency pair. Let's assume I use 2 lot size, and then I enter a sell trade. I enter a sell trade. With this, I'm overexposing my accounts. If you can see, on one trade, I'm going for buy. On another trade, I'm going for sell. Which means at the end of the day, one trade will close at profit, while the other trade will definitely close at loss. So that is one of the explanation of overexposing. By this, we are overexposing our account. Or we are trading on the same currency pair, just like this. Let me close one trade. Let me close one trade. Yes. So my account is on minus 20 right now. Then I go for sell. And I feel like, oh, let's assume this is my profit. I'm in profit right now. Let's assume I'm in profit. And I feel like my trade is actually going to, is in profit. You now open another trade on the same currency pair. You now open another trade. And I still go for sell. And I still go for sell. By doing this now, when my market is in, when this trade actually go to my direction, I will be making money. I will be actually be in profit in two different, on that particular currency. I'll be actually being in profit. Double of my profit, because there is double trade. But when this account, this particular trade is in lose, I'll actually lose ×2 of the amount I want to lose. I hope you understand my explanation. So when you are trading just like this, and your account, your trade is going to profit, then you still enter another trade on the same currency. Just you have the belief that the market will keep on going to profit. And the moment you enter that particular market, the market might reverse. And both of the trades might actually end up in lose. So by doing this, someone is overexposing accounts by doing this. So we have what we call, under exposing of accounts, we have what we call currency correlation. So let me share you my screen. Let us take a look at what currency correlation is. Currency correlation. Let us go to my FX book. Yes. So I'm looking for where we have our currency correlation. Yeah, under markets, you come to correlation here. So we want to see which currency and which currency have the same correlation. Like, you know, we have some currency pair that if one is buying, the other one will be buying. They form in the same patterns. If one is selling, the other one will be selling. So you can get to know which of the currency pair you can trade together, and which of the currency pair you might actually avoid not to trade together, because it will just be as form of that you are risking double of your accounts. So let me put like 90% here as well, 90%. Let me change the time frame. We are using 1 hour time frame. So like this. So this means in AUD card, let us look at currency pair that is above 90, yeah, something like this. which means if I'm trading AUD JPY and I still take another trade on GBP JPY, which means both AUD JPY and GBP JPY, they are both correlated 96%, which means if one is buying, the other one will be buying. If one is selling, the other one will be selling. There are 96% correlation. So we have another one here, USD JPY, which means if AUD JPY is selling, I will be expecting sell from USD JPY as well. So let us take a look at the patterns. So let me show you in my MT4. We have AUD JPY, we have GBP JPY as well. Let us take a look at it in our MT4. AUD JPY. And GBP JPY. Let me bold it. This is AUD JPY, and this is GBP JPY. If you can look at the patterns here, can you see this is AUD JPY? It's in uptrend. It's going like this. At this point, it goes up there in reverse. It reverses back. Let us check GBP JPY. Can you see? This is another one, GBP JPY. Can you see how it is forming? It comes up like this, then it comes down. Which means if I take a trade on AUD JPY and I still take another trade on GBP JPY, which means I am risking double at this particular time. If I'm going for buy from one currency, then the other currency, if I still take buy, it is either I win both trade or I lose both trade. So we might avoid these things. Before you take any trade on two pairs, we can go and look at how currency related they are before we come back to our MT4 to take such a trade. If I go for buy on AUD JPY and I go for sell on GBP JPY, I will lose one trade and win one trade. So that is how currency correlations works. Can you see on AUD NZD as well? This is AUD NZD. We don't have any 90% correlated here. So this CAD JPY. If I take a trade on CAD JPY, it is correlated with AUD JPY 97%. This is with 93%. GBP JPY with CAD JPY. We have another one here, USD JPY. If I take a trade on USD JPY and I still take another trade on CAD JPY, they are correlated to each other. So you can go to myfxbook.com to check which currency are correlated. So to avoid overexposing our accounts, we can be checking this. And the last one is overriding stop loss. Overriding stop loss is, some beginner or some traders that they are just beginning. For you to become a pro trader, you have to eliminate the fear of losing a trade. Eliminate the fear of losing a trade. You don't trade with emotions. You have to eliminate that. Now, when you take a trade, and let's assume I take a trade at this point, and my stop loss is here, and my take profit is at this point, then I am targeting that the trade will, this is my take profit. Then I'm going short here, I'm going short, which I believe that the market will come down here to hit my take profit. Then the market comes down here a little bit and reverse back here and reverse back. Now, the fear of, wow, the market is about to reach my stop loss, and you take this particular stop loss, then you move it back a little bit. That is what they mean by overriding stop loss. So for no reason, you don't have to take your stop loss or move your stop loss away. Before you take any trade, you have to first of all do some analysis. And when the market reverses to hit your stop loss, definitely your calculation is wrong and your analysis is wrong. It is a loose market. Now, you don't have to be taking this particular stop loss, then shifting it back. Before you know it, the account is gone. So let me show you how it is in our MT4. Something like this. Let's assume this is my stop loss. Let me use candlestick. I set my stop loss at this point. I set my take profit at this point. Then I want to enter a trade. Let me enter a straight trade now. Let me use 5 lot size. Then I am targeting that the market will go short. So I did not set my stop loss. Now, let's assume this is my level of stop loss. This is my level of stop loss here. Now, when this particular market starts reversing, then it's about to touch my stop loss point here, my horizontal line. Then the fear of moving the trade back up a little bit to avoid this particular market to touch it. This is what they mean. This is what we mean by overriding stop loss. As if you want to be a profitable trader at the end of the day, when just let the market be. If you want to touch the stop loss, let it hit the stop loss. Then you know that particular trade is a losing trade. Not to be shifting it back. Before you know it, the account is gone already. So we just have to avoid this. Let me recap all what I've explained. Number 1 is over trading. Number 2 is overconfidence. Number 3 is over leveraging. Number 4 is over exposure. And number 5 is overriding stop loss. So I hope you understand. You understand all my points?
Yes,
so
sir.
If there is any point you don't understand in these 5 O's, let me know. That is the 5 O's you must understand as a trader, and you must try to avoid. Okay. So you can let me know if you have questions. Let me know. So if you don't have questions, then I think that is all we have for today. That is what we have for today. Just make sure
sir.
I'm with you.
I have a question, sir, about exposure of account.
Okay.
So, what you mean is that we will not open 2 trades at a time on just one analysis.
Okay.
You know, it's like you said, like maybe we analyze that the market will go long, like
Yes.
buy.
Yes.
Then we enter a trade to buy. Now we saw that we are making profit, but we want to maximize that time for more profit.
Okay.
So we now enter another buy. So you understand?
Yes,
And
yes.
so you said that we shouldn't do such a thing.
Yeah, that is there is
maybe probably the market goes against us.
There is
Can you
hear me? Are you true?
Yes, sir. I can hear you, sir.
Okay, good. Even if you want to, there is something they call.
I'm done, sir.
Okay. So even if you want to do, there is something they call laying of trade. Laying of trade. So this is the best way for you to take such a trade. Let me show you my MT4. You can see my MT4, right?
Yes, I can see it, sir.
Okay. Let me close this trade. Let me enter another trade randomly. This time around, I'm going by. Yes. So my account is in minus $29 right now. Is a minus, but I have it in mind that my analysis is correct. So now, and I want to enter another trade. This is what we can do. You have to be patient for this particular trade. Now, let's assume I want to reach $250. I'm trying to reach $250 on this particular trade. Then the moment I earn $250, I can move this particular trade. Let me show you. This is my point of entry. That is my entry point. Let's assume my stop loss is here, and I set my take profit to be here. And from year to year, my analysis says I'm going to lose. If the trade go against me, I'm only going to lose $250 from this point to this point. Now, so now, what we can do actually here is that my trade start now going to profit, and you read this particular point here. Let me draw a horizontal line to it as well. My trade, I've read this particular point. I've made half of the profit. I've made $250, which means my profit have covered my loss. Then I can now shift my stop loss back to break even here. The point I enter this particular trade, I will shift my stop loss back to break even. By doing this, I can now enter another trade. So if I enter another trade now, even this particular trade, if he later go against me, then I'm not going to lose anything. And the new trade as well, if he later go against me, I'm still going to lose my initial risk, which is $250. I'm not risking more. So you just, I hope you understand me. You are just going to be patient for your if you are targeting to earn $500, just allow your trade to reach $250. when you reach $250, you move your stop loss back to break even. And when the trade later go against you, you are not going to lose anything on this particular trade. On this particular trade. And when the trade even go along with your analysis, you are in profit. Definitely, in one trade, you are going to earn $500, and on the second trade as well, you are going to earn $500. But if it is lose, on one trade, you are not going to lose anything, and the other on another trade, you are going to lose $250. So you are not risking more. By doing that, you are not risking more. So that is how to enter such a trade. Because nobody can predict what markets can do at that moment. Markets can do anything. Anything can happen in the markets. I hope you understand my point.
Yes, I understand, sir.
That is how to layer trade. All right. So I think we are through for today. Till tomorrow.
All right, sir. Thank you very much, sir.
All right. Thank you, sir.
All right. You're welcome.